Welcome everyone to the Kindle Report for March 13th, 2020. The market meltdown is continuing, and I'll try to unpack. There was a lot that happened today. The Fed entered the market. There's tons to talk about, but the bottom line is this meltdown continues to happen. There seems to be no bottom, no buyers, nobody interested in owning this market. And that's going to continue. I don't see a bottom at this time, and I'll go through the technicals. There's a couple areas that we can look at for possible bounces, but please understand that this market, I've been telling you for now the third week, that this market is broken and it's not going to snap back. There's not the buy the dip. All of those things are not part of the strategy you should be considering. And the reason why I say that is we're operating in a different world right now. Think about what's happened just in the last 24 hours. The President of the United States has blocked travel starting tomorrow evening from Europe to the U.S. You're also seeing all types of activities being shut down here. Disneyland is shut down. I talked about South by Southwest, which is a major event for film industry and music and the arts in general. This has been shut down, and there's just a lot of revenues that are being lost everywhere you look. There's nowhere to go. They're shutting down the economy, and they're justifying it on this coronavirus, which I did see a CDC announcement that 80% of the infections aren't even going to be bad. So it's just certain people that it affects, and it appears to be older, vulnerable people, diabetes, old, other issues going on. So I don't want to talk much about the virus. It's important that it's the backdrop that's driving this. But what we're seeing, I talked about this in a couple of tweets if you follow me on Twitter, is that we are seeing right now a massive dislocation of capital. And what I mean by that, when these equities drop, like for instance, I was picking on LPL, LPLA, when that stock has now dropped 50% in value. And what it happens is it changes anything that company wants to do. It's not just LPL. It's Charles Schwab is down big numbers, not as much, but all the broker dealers are down. The mutual fund companies are going to be hit. It goes on and on. The industry is being hit from every angle. The mutual fund companies, you're going to see a lot of companies after the aftermath of this will be a lot of companies will be closing shop. Okay. There's no way. They've already been bleeding money. Now with this event, people aren't going to come back. I've said this before, is that mutual funds are like cigarettes. No one wants them anymore. They're expensive, have too many costs. There's some great managers out there, but they're just going to disappear. The other thing that I want to talk about is the massive selling, and the machines are continue to run the market. So let's talk about this. I was talking to somebody earlier today what it means when the machines are running the market. Now, it doesn't mean that the algorithms there are out there that are hammering the market and causing some of this volatility that are actually trading. The algorithms I'm talking about, these machines, there are no physical market makers anymore of substance. Everything is run by algorithms. So when you put an order in on a stock, they know the supply and what on both sides of the equation, and that bid ask is formulated by the activity in the markets and what order flow is coming in. So if order flow stops coming in on one side of the orders, I'm an ex-floor trader. This used to happen all the time. All of a sudden there's just no bids. And then you start looking for a bid. And with an algorithm, that's why you see where if you watch some of the shows that I posted, you'll see just air pockets where the futures are easy to see this in. They'll just downtick 200, 300, 400 points. They finally find a bid. Then there's no offer, and it goes up and down. So there's air pockets everywhere, and I've continued to talk to you about the lack of liquidity is one of the major issues out there. And the whole process that we're seeing unfold is just outright scary. And trying to go back to the dislocation of capital, what that means is a lot of companies there. I talked about this last night in the live broadcast. There are companies that have financing deals based upon their currency, which is their public traded stock. So whatever that stock value is, that's their currency or a collateral. All types of deals are structured around that currency and the holdings of the company and their ability which to pay on things. So this is big. Everything has changed instantly. And since this market won't stop going down, I'll show you in a minute, we're down another 3.5% right now as I'm talking at midnight East Coast time. Okay? These markets are continuing just to fade, and there's no buyers. Asia's down hard. Everything's just collapsing. And, I mentioned in last night's broadcast, I really feel like this is World War III that you're seeing. It's a financial war. Not trying to sound like there's some conspiracy going on, but I think there is to some degree. That the Chinese knew about this virus. They let it out in the world. Now they're getting everything under control, and the rest of the world is being infected. And I still don't think it's that bad. We'll find out. Hopefully I'm right, and this thing doesn't get any worse. But the bottom line is this thing is disrupting the financial markets. And I will talk about this in a minute, but I had many questions coming into me today, both by calls and emails, talking to me about what's going on with the debt markets. And I'm going to show you what's going on with the debt markets. They have become victim to the mass liquidation. I talked to you about everything from gold, Bitcoin. Gold is down 76. I think it's down another 20. We'll look at the live screens here in a minute. There continue to be carnage there. Bitcoin is down like, I don't know, $3,000 or $4,000 now. It's just getting hammered. And the reason why is that these are assets that are being sold and they're raising capital. And, gold's not going to move up right now. I keep talking about that. We'll cover it in a minute. But all of these assets are being sold down. So back to bonds. The bonds this is a really serious issue. And I talked about this decline in the equity markets has exposed everything. So I'm going to give you an analogy that I think is something you can think about. Front windshield now is national debt, corporate debt, every type of debt, even municipal debt is in question. You look out the side window, there's more debt there. Work on the other side, there's debt everywhere around you. Look in the rear view mirror and it's literally blurred out. You can't even see anything in the rear view mirror anymore. And so what's happening is everything you see is debt. And I've talked about this. I'm kind of hammering this issue down the last several videos. But this debt is going to become seriously in focus. And everything about it is going to cause problems. The national debt. But all debt is at risk. I'll show you some charts when we go through the technicals. A chart of AGG, an ETF that a lot of people follow, got absolute hammered today. But there's municipal bonds are getting hit. Every bit of debt that we have been talking about for years and years, all of us that have watched these markets all have been talking about the national debt and corporate debt. It goes on and on, but we were willing to give it a pass. And the reason why we're willing to give it a pass is because everything else seemed okay. Yeah, that exists, but no one seems to be worrying about it. Well, now it's the only thing to look at. And when markets get hit like this, the psychology of the market, I've been talking about this for about a week now, the psychology shifts. And it shifts from the rose-colored glasses to this amazing view of what's real and what the problems are, which right now is debt. And debt isn't going to get any better. And in fact, these deals I was talking about on the corporate side, there's going to be deal failures because some of the thresholds that were set on some of these deals, these stock values have fallen below them, which can trigger a payoff event. So a lot of these companies are tied to, as long as your stock stays over and your company's valued at a certain level, you're fine. But if it drops below that level, then there could be an acceleration clause. all kinds of events. There could be a balloon payment due because of that, which puts these companies at major risk. So at some stage, we'll start talking about CDSs and all kinds of other stuff. So let's go to the Fed. With the Fed has pledged all kinds of money, up the number of repos they're doing every day. They're committing money everywhere, and all it's doing is letting everybody know that what I'm talking about is becoming an issue. I've seen stories today that people are talking about, well, the Fed's getting ahead of the issue. No, the Fed very seldom gets ahead of anything, okay? I've been in this market for 42 years. I've been a Fed watcher for a very, very long time. These guys are always behind the curve. And basically what's happening right now is they're seeing liquidity, literally no liquidity in areas, and they're supplying liquidity. They're not doing this for fun. They're not getting ahead of anything. They are literally supplying this liquidity. And this is going to continue. It spooked the market. If you saw when the Fed came in today, market popped about 1.5%. And then all of a sudden everybody went, wait a minute, things are even worse than we thought. And especially the commitment, when you started reading what their actions are going to be. Go out and read that. I'm not going to go through the details tonight because I really want to move on to the technicals. I've already spent a fair amount of time talking about this stuff. But this is what's going on in the marketplace right now. And the risk is that municipal bonds, all debt is become very risky. Now, I know everybody's going 60-40, all that stuff. Well, all of a sudden, I don't know how to say this other than there is no safe place. There is nowhere to hide here. You can look at the assets, look for yourself, and I'll show you some stuff. There is nowhere to hide. Nowhere. And until we start to see some type of stability, there's no buyers. Somebody's got to show up, but I don't know who that is. And so we're going to continue this carnage as long as this stuff happens. And even if we do catch our breath and we get a low, there's still going to be a bounce, and there's going to be another round because of the catastrophic events that have happened with these companies and deals. There's just going to be a lot of stuff. So now every analyst right now, as we get closer to the next earnings season, they're not looking at earnings reports anymore. They're looking at debt. They're looking at other parts of structure. And that's what I'm trying to tell you. The marketplace, market participants are going to begin to look at different metrics than they have before. It's good in some ways that finally all this stuff is going to get scrutinized. The bad news is it's deflationary. It can trigger other events that really get us back into a 2008 bank crisis or worse. So over the next several days, I'm going to continue this dialogue. I'm going to continue to watch this debt market because we already know what's going on in the stock market. There's no buyers. Now it looks like it's rotating into the debt markets. And I've told a number of people today, be very careful. Debt is absolutely toxic at the moment. And it all happened in a minute today, and it happened when everybody realized what the Fed did was not a good thing, but they weren't getting ahead of anything. They were plugging holes. There's a hole in a boat, and they're trying to plug it and trying to keep this thing as well as they can from too much water coming in and everything going down. So be careful with this debt. Scrutinize everything. I'm going to go one more thing on the debt, and specifically on treasuries, okay? The Treasury market, think about this. Let's say China really did want to start some world situation, and they started it. Now they've got control, and they're the only ones under control while the rest of us are fighting it. What's the other thing they can do financially? They're seeing the financial markets collapse. China could be the big seller in treasuries. They could be the guys selling the treasuries. They could sell those things down and just start dumping treasuries. And now we have this collapse of equity prices, the deals I talked about, the dislocation of capital, because when equities go down, the capital gets vaporized. It doesn't exist anymore. That company was worth 20 million, now it's worth 10 million. There's no way to get back to 20 or justify. It's just worth what it is. And so let's say they were the seller in the treasuries. Let's say that's what happened. And that's what's going on. They could jack these things up. You get treasuries back to 2 or 2.5% in something like this, then everything just goes kaput. There's no way to finance anything. There's no cheap money. This thing could all blow up. And I've said for years, the Fed has been controlling the markets for years and years, and everybody's bought into it. In the end, the markets control the markets, and if the sellers get out of control in the Treasury market, the implications are absolutely huge. So I think I'm done with my rant, but I needed to say all that stuff because this is a very serious issue that's going on out here. This is a no-joke deal. And whether it was manufactured by the situation that we've been watching or not, it doesn't matter. It is relevant. It is true. It is happening. A 42-year veteran, never seen anything like this. No one ever has. I was around in 1987, and that thing was crazy. We did 22% in one day, okay? And that was absolutely crazy. But this is different. This is as unorderly as it feels. It's orderly in other viewpoints because what's happening is a continuing liquidation, and they just keep hammering and hammering and selling. Sorry to get on such a long rant, but these are serious issues to consider, and especially for those that are watching this, that are advisors, that are making decisions for people. You need to really think through this stuff before you go buying in to this ideology of buy and hold and the market's going to come back. And maybe it will, okay? But for right now, there is a tremendous amount of risk. And I've been an advisor for advisors for 20 years. And I've been through the 2000 situation. I've been through, 08, 09. Some of you watching this were clients of mine or still are clients of mine. We got through that thing amazing, but we made some really hard decisions. We did things that were very unorthodox. And you can't sit around, one of the approaches that we talk a lot about is having an adaptive approach to the markets versus being static. So I'm getting way down this rabbit hole, but I just want you to pay attention to the debt, pay attention where you put money, and pay attention. You shouldn't, in my opinion, you shouldn't be in any equities. If you are, I don't know what to say for you because there's no way to be buying any of this stuff. I think the NASDAQ was down almost 4%. We'll take a look here in a minute. Let's go ahead and kick into the technicals. Okay, everyone, since I went into a big rant about bonds, let's take a look at AGG. Look at this collapse in prices here. We've went from 119 down to 109. If you look at this, this is a daily chart. Let's go to the next level and take a look at the intermediate, so weekly. And you'll see this drasticness of the move. We're all the way down to the 200-week moving average. Hopefully there's some support down here, but it's going to be pretty tough, especially with what continues to go on the screen. The futures, they show down 247, but there was a differential between the cash close. So equity markets now are Dow Jones down 3.74%, S&P roughly 3.43, and the NAS down 4.3. So these things are still continuing to be crazy volatile. But these bonds are in big trouble. This is what I'm telling you. This break tells you this is a no confidence vote. That's all this is. Look at the monthly graph and look at the the long term. This thing is all the way down to the monthly support levels, but this thing is broken. Once again, they're now breaking the bond markets. First it was equities and then went for gold, and then it just keeps going through and cycling through everything that I've been talking about here. It's absolutely crazy from the standpoint of the amount of selling in all asset classes. So 60-40, folks, you just got your ass kicked. Okay, that's all there is to it. And there's just a lot of issues, and this is a very unique situation. And the only thing that works right now is cash. And I'm even concerned about some money market funds as well. So be careful what you put money in. I've always used the government funds as a safe haven. They should be safe. We'll see. One of the other things I didn't talk about during my rant was that don't forget, if the revenues of the U.S. government go down the tube and we get into a major recession or worse, they're not going to be able to pay their debt, and it's going to implode. So let's hope this is not a doomsday scenario, but it's certainly one to have the utmost caution on everything you're doing. Looking at the S&P, you see the carnage continuing. This is the cash market. It literally went out very close to the low of the session. We get down to 2478. I talked about last night in the live broadcast that it's possible we're going to the 24 handle. I didn't know it was going to be today or on Thursday. So I talked about 24 to 22. There's some other numbers that just get so ugly. It's hard to imagine what's going on. If you look at the VIX here, VIX closed at 75 today. So that's the cash VIX, not the futures on the VIX. I think they're 54 or something like that, what I saw, depending on what contract you're looking at. But this is catastrophic situation. I've run that home for the last several days. There is no sign of a bottom. We're still seeing overnight selling another 3%. Right now, the futures are down 55. Let me click on the futures contract so you can see what that added in. You can see this is moving down. And, you know, it's odd that we would have not only these markets imploding like this, but it's Friday the 13th. What a way to end this week, right? We're just crazy how it's going. And I have to tell you that the futures have been the best to figure out what the patterns are going to be. This was the first chart that indicated that the failure was going to happen and we're going to see this next leg down. You can see that bar that we had yesterday, just completely insane. It's one of the biggest bars we've seen yet. Dow Jones down 2,300 points yesterday. It's a bottomless pit. Momentum is crazy. PPM1 over on the left over here, PPM1 1.87 minus 1.49 and minus 0.69. And this is the daily on the futures, okay? We're going to go back to the cash S&P and we're going to go to the weekly chart as this is going to be the final day of the week. You can see we are below the 200 week moving average. And this is just unbelievably catastrophic. If you look at the PPMs down here below, they are straight lines down. I developed these indicators back in 1984. And I've watched a lot of ticks, a lot of bars with this. Never seen this like this kind of collapse and momentum surge. That when these PPMs collapse like this, it will take somewhere between a minimum of 20 bars, but most likely it'll be 60 bars to get those PPMs to normalize and be in a place where we could actually set up some kind of low and have some sustainable rally. There's nothing in the near future other than some spike and it reverses. If what the Fed pledging maybe as much as $1.5 trillion didn't mean anything today, I keep telling you folks, this is not about money. There's no money that can fix this market. There's no fix for this because they've shut down the revenue sources of the country. They're shutting down the economy and they're shutting down big pieces of the economy. And this is just going to be catastrophic across the board. I don't know how long it's going to take to come back from this. This is right now making 2008, in my opinion, look like a sissy game compared to what's going on because it was the 2008 situation where banks and real estate, we knew it was concentrated. This is across the board, virtually all industries. All of this, so let's go to the monthly graph on the cash market, on the S&P cash, and you'll see this is straight down. I talked about this last night. we could go as low, not tomorrow, but in the next, let's say 3 to 6 months or less, we could go as low as 1689. We could go all the way back. This will take us back to the highs that we rendered back in 2000 at around 1500 on the S&P, and then again we saw these numbers in 2008, right back to 1570 or so. And so what we're doing is we could retreat and take all of the gains from the markets that has occurred since 2009 away. And if you think about it, that sounds kind of crazy, but if you think about it, what we saw in 2008 and 9 is we saw it retrace and go below the lows of 2002 and 3. So this is not unrealistic, and to reverse all of the gains that happened. So what happened in 2008, we reversed all the gains that happened on the recovery from 2003 to 09. So now we're possibly going to be doing exactly the same thing. We're going to reverse all of the gains going back to square one. Let's take a quick look at the treasuries. We're coming up on resistance at treasuries. You can see the 10 period moving average coming down here right at the 850 level. We get through that, then we're heading for back to 1%. And depending on the scenario that I painted earlier, if there is a big seller coming into this market, it's going to slice through these averages with no problem. We do have a minus 4.88 downslope on PPM1, minus 2.87, and minus 1.69 PPM 1, 2, and 3. Anything under 0.25, minus 0.25 is a trend. The probabilities to get above this number are pretty low for tomorrow, but the way markets are acting, they've been able to slice right through these numbers and just continue to, the panic carries them up. There's a dotted line here. You see a blue dotted line that's at 104. That is going to be the major pivot point on these charts for the foreseeable future. I don't, anything above 1.04 would set up a massive acceleration to the upside. I don't expect that to happen. I talked about this last night. Is what I'm really looking at is a consolidation of the markets here, and probably staying below 0.9 and above 0.75. Next is the gold market. We've continued to see the carnage happen in gold. I talked about last night we would go to 1600. Well, we went right through 1600, and we're all the way to 1558. We're down another 3150 here. And this is also, this 200, this is the 200-day moving average is going to come into play, 1521. There's no reason to buy gold right now. And I know there's arguments out there that gold did really well back in the 30s during the Depression, but gold itself wasn't the player. It was actually the gold mining stocks. It was one of the few things to buy back in those days. It's not 1933, okay? It is 2020, and there's an entire world, and you can't invest by looking in a rearview mirror saying, well, this is what happened then, so it'll happen again. Very seldom does anything happen the same way twice, including all the last 3 equity declines we've seen. 2000 was different from 2008, and this situation we're in right now is different from all of those, including going all the way back to the 87 crash. Every one of these situations is unique, and you can't draw a lot of correlations to them other than some of the action might look similar. But this gold market is in a lot of trouble. We look at the intermediate. I talked about the intermediate charts are starting to roll over. PPMs are rolled over. Now we've got an outside bar this week. Early in the week, we saw enthusiasm to buy gold. Now we see a complete reversal. And not only did we take out the high of last week and the low, we've taken out the high of the last 2 weeks and the low. This is a massive reversal telling us that we very easily will go back to the 1510 level. And there's a possibility of going even lower toward 1450. This market appears to be done from the standpoint of the trends, and the monthly trends confirm exactly that. Going to crude oil, it's interesting because this is the market that started everything on Sunday night, right? This was the reason, the Russians and the Saudis and all that. But this thing is holding up really well. In fact, if you look, PPMs are starting to reverse. There's a pretty good shot. I'm still calling for 40 to 43 on this, on a rally. And the key pivot number is 43.19. Break above that, then this thing could go back to 45 or so. Not predicting that, but I am telling you, not going to $20. And we probably saw the low on Monday, and that's going to be the low for a while, and most likely will challenge the $40 level and get and fill that gap. I've talked about this gap here that for the last several days. All of these situations that are happening here are really significant, and they're part of the catastrophe that we're dealing with on everything that I unpacked in the opening comments. I just want to cover Bitcoin because I talked about this literally last night. It's gone from almost from 7,800 all the way down. Right now it's trading at 52.20. It's been as low as 51.74. And that's just a massive decline. In fact, if you look at the decline yesterday, we've already rolled the clock over at midnight. It got as low as 39.01. It's bounced off of those lows pretty good, but there is just this mass liquidation going on, and there's nothing to stop any of this, folks. Don't get involved. Try to grab this thing and find value. It's not time. There's too much risk based on everything I've talked about in this show tonight. Best of luck, and be careful with these markets because they are very treacherous. We'll talk to you on Sunday night.